In this week's episode of the Brisbane Property Podcast, we are wrapping up 2024 with our year in review. If you want the full rundown on this year's property market trends for Brisbane, you won't want to miss this episode.
Welcome to the Brisbane Property Podcast with your hosts Melinda and Scott Jennison.
Hi everyone, and welcome to another episode of the Brisbane Property Podcast. Hopefully everyone's had a lovely Christmas, and today Melinda and I, a year in review.
Yes, that's right. Happy Boxing Day to everybody across all of Australia and around the world. I know we have an international audience. We hope you've had a fabulous Christmas. Just heads up, we are not recording on Boxing Day. This has been recorded prior to Christmas. However, knowing that this was going up on Boxing Day, we do want to wish everybody a very happy festive season. Yes, of course, this episode has been dedicated to reviewing the year that we have had here in Brisbane in terms of our property market performance. And we're going to provide that summary to help listeners understand just that roller coaster ride that we have experienced month on month in Brisbane in terms of what's happened in different segments of the market and why we've seen that happening across property segments throughout Brisbane. So we hope you enjoy this episode.
So everyone, as Melinda said, going everywhere. A Boxing Day test is a big thing for Australia down in Melbourne. What a year we've had, 2024. So Olympic Games, all those types of things. But the property market, it felt like, if I just sort of go back a little bit in my mind, and I just remember going through month after month after month, I felt like I was saying the property's gone up 1.4% each month, and 1.4 and 1.5. It sounded like I was repeating myself month after month. And towards the back end of the year, we've still seen increase, not as strong as some parts. But definitely we've seen the property market in Brisbane continue to perform very well.
Yes, I always reflect back on the first market update that we do at the beginning of every year at the end of January. And for those that want to head back through previous content, not only do we provide a monthly update on our podcast every month, but we also write a very comprehensive and detailed market update on our blog, on our website, streamlineproperty.com.au, and head to the blog tab and you'll be able to look up the property market performance based on market updates. And every single month we report on what we're seeing on the ground, and we give some insights in terms of what we expect might happen in the months ahead. Now, when we look back at what we actually wrote in January 2024, we said Brisbane's hit a new record high in terms of dwelling values, in terms of unit price growth and house price growth. And that has been the case every single month here in Brisbane, with positive price growth in both segments of the market every single month throughout 2024. So when we look back to January, for example, we'd just come off 1% price growth across the month of January, and the median dwelling value for all of Brisbane was sitting at $796,818. So that's down well and truly on our current median value, which is sitting at $886,540 compared, according to that CoreLogic data. So we really have had some very strong continuous price growth across all dwellings here in Brisbane. And I think it's important that we just get an understanding also of how that's broken down in the house and unit market as well.
We've obviously seen throughout the year of 2024 interest rates. So we've seen some changes in interest rates, been on hold for a while now, and obviously the cost of living pressures. Brisbane's still been pretty resilient against all of that. We've actually stayed pretty strong, strong demand, and that's probably one of the big highlights, I think, of, well, whether it's a highlight or not, but a big thing to note on the year. Supply and demand. I think that has been a massive talking point and still is on the way the market has performed, and also migration.
Absolutely. And I think that, that's an ongoing discussion that we've been having for many months here in Brisbane. And it has been the cause of property market differences in terms of performance across different capital city markets throughout Australia, because when we look at the beginning of the year at how all markets were performing, there was less disparity, whereas towards the end of the year, we certainly saw markets continue to accelerate in growth and other markets that were actually in decline. And a lot of that has to do with those fundamentals, low supply and high demand. Of course, here in Brisbane has continued to drive property prices upward, whereas other capital city markets such as Melbourne especially, but also Sydney, they've seen supply levels increase over the 12-month period, so more properties available for sale. And even if demand remained unchanged, that simply meant that there was more downward pressure on prices, and that then followed through by the end of the 12-month period in terms of negative price growth on a monthly basis. But let's sort of have a look at the house data, where we were for Brisbane back at the beginning of the year and where we are now. So in terms of Brisbane houses, we weren't the second most expensive capital city market back in January. Melbourne was still more expensive than us when we were looking at median values, and so was Canberra, and of course Sydney was well ahead. So Brisbane was sitting in fourth place in terms of its median value across all capital city markets of Australia. And at that time, at the end of January, our median value was $888,628 in terms of the housing market. Behind, or rather in front of Brisbane, more expensive than Brisbane, we actually had Melbourne with a median value of $942,750. Canberra was ahead also with a median of $968,000 or thereabouts. And Sydney was the most expensive capital city market with a median value of just under $1.4 million. Now, fast forward to the current property values, and this is data up to the end of November. Of course, the December data has not yet become available, but fast forward over that 11-month period, and we now see Brisbane sitting in second place in terms of median house values across all capital city markets, with Brisbane's house median value now sitting at $974,396, and that's in second place behind Sydney, which is $1,482,750. So Brisbane has now overtaken both Canberra and Melbourne in terms of that median house price from a capital city market perspective. So just for perspective, Melbourne's gone backwards, currently sitting at $923,422, and Canberra sitting very close behind Brisbane at $972,753. So you can see just how strong the Brisbane market has been when we compare it to other capital city markets where they may have moved sideways, had much slower rates of growth, or in fact declined, as we've seen in some of those capital city markets. So it's really interesting.
Now, that was the housing market that we touched on. I think one big thing as well we've really noticed through 2024 especially is the unit market.
Yep.
It's really outperformed most markets, I think, everywhere. It's been a huge trend where it's been a massive performance from the unit market. Affordability pressures, that's probably pushed more buyers towards those sort of dwellings, affordability side of things where they can actually buy a unit. And we've seen that, for example, units, which we'll run through some of the information now and compare it from the start to now, the annual growth up 16.2%, while houses were 10.2%.
Yeah, so that's current data up to the end of November 2024. So we've definitely seen outperformance in the unit market compared to the housing market in Brisbane. And that's actually quite similar to the previous 12 months where the unit market outperformed the housing market again. Now, what is interesting, you've rightly pointed out, Scott, that affordability is a really big reason why a lot of people have shifted towards that unit market. When we've seen the house median value shift so significantly, especially since pre-COVID levels, what we've seen is that in order to purchase a house that's affordable for the majority of the population, people are needing to move further and further and further away from the lifestyle hubs and further away from employment. And they're having to make a decision as to whether they need to or want to live in a house on a single lot, much further away from the inner city hubs, or alternatively compromise on the style or property type that they might be prepared to live in, and therefore live much closer in. And we've seen this shift, and it could be a demographic shift. It could be the fact that people are wanting to move back into the higher density locations close to lifestyle hubs, coffee, restaurants, bars, entertainment precincts. But we've seen this shift on the ground in terms of where buyers are looking and where the demand is being pointed to. And lower density units and even some higher density units in the likes of South Brisbane and Brisbane City itself with some decent views have been extremely high demand product types throughout 2024. And we really haven't seen a lot of that demand wane away in that part of the market. Of course, partway through the year, we've seen some changes to stamp duty thresholds here in Queensland, which has meant that the affordability level for first home buyers looking for stamp duty concessions has shifted to $700,000 dwellings. And of course, that's shifted the demand into that unit and townhouse part of the market as well. So units definitely still a product that's in high demand across the city.
And again, that change that was implemented by the government was in 2024, where they moved that stamp duty concession up to $700,000.
Yeah, that's right. So if we look at the unit market, for example, when the median value at the beginning of the year for a unit in Greater Brisbane was $568,595. And Brisbane was the fourth most expensive capital city market in terms of unit prices at the end of January. So again, we sat behind the likes of Canberra, Melbourne, and also Sydney in terms of that median unit price. At the end of November, our median value had shifted all the way up to $677,810. And that has put Brisbane's median value in the unit market as the second most expensive capital city market behind Sydney. So we've overtaken the median unit value for both Melbourne and Canberra, which is surprising for many. But that is the reality of just how much our market has shifted over the last 12 months.
And again, as you're looking at that information, Melbourne did go backwards a little bit, and Canberra as well.
In terms of unit prices. And I think this is the thing that a lot of people find it difficult to understand how different markets can perform in different ways within the same country, because we are all exposed to the same macro environments. Interest rates have been the same across all markets. We've got the same Australian economy at large. But the most important thing for property investors and property buyers alike, they need to understand that markets are driven by local drivers, not necessarily those broader economic indicators. They certainly have an impact on the demand side. But in terms of local market drivers, we know here in Brisbane, for example, just looking at the unit market, we've had a huge oversupply back in 2014. 10 years ago is when we saw a change in our city plan. 2 years after that, we had more units than we knew what to do with. They simply couldn't sell them. They couldn't rent them. And it had a shift across all of the market. But fast forward now to 2024, there's very few cranes in the sky. It's unaffordable for developers to bring a lot of the product to the market. You can buy established units a lot cheaper than the cost to replace or the replacement cost. And there's more demand shifting into this product type. So we don't have a huge volume or a huge oversupply of units whatsoever in Brisbane anymore. In fact, we have an undersupply. We're not building enough to accommodate the demand for them. And that's why we're seeing this upward pressure on prices. And that may be very different to what other cities might be experiencing in terms of what has been built and what that pipeline might look like. But here in Brisbane, they are the fundamentals that people need to be aware of.
Before we continue on, another thing in 2024, we had an election.
We did.
Where we've seen a new government come into Queensland. That's when we're talking about a whole year in review. There's some little bits we'll throw in there occasionally, apart from just the property side of it. But some of these things actually have an influence on our property market as well.
Absolutely.
Affordability and demand. And I know if regular listeners listen to our market updates, we'll talk about market values and through houses, units, etc. But we look at different segments of the market. We've seen this probably consistently, probably recently anyway, the affordability side, lower price properties consistently outperforming higher valued segments of the market. And this trend is probably that of affordability challenge first home buyers, investors driving the demand for more affordable options?
Yeah, so when we look at lending data, it's definitely shown a shift towards more finance commitments being made to first home buyers and especially investors, and that's Queensland level data. So we have to be mindful that that's not always representative of what's happening in the niche market of Brisbane, but it does provide a good snapshot view. And of course, when we look at first home buyers and property investors, they're typically buying at a more affordable end of the market, at or below the median value for certain product types. So then that automatically shifts that demand into those lower price point properties. We can look at the way dwelling values have been segregated since the beginning of the year and right through towards the end of the year. So when we look back at the end of January, in the 3 months up to December, in fact, we can see that all segments of the market, meaning the top end of the market, the middle part of the market and the bottom end of the market, they were all tracking relatively similarly in terms of the quarterly growth rate. So if I was to look back, I know that the lower 25% of property values in the last quarter of 2023, they grew about 4.2% across the quarter, whereas the top end, the top 25% of property values grew 3.5%. So still a little bit of variation between the more affordable end of the market and the most expensive part of the market. But fast forward through to the end of the year, and in the 3 months up to the end of October, we saw the bottom end of the market, the bottom 25% of property values, they were still moving at 3.9% quarterly growth, whereas the top end of the market, it was still positive growth, but the rate of growth was 1.8% across the quarter. So you can see just how the segments within the market, we saw that variation depending on price point. And a lot of that comes back to the fact that the unit market has outperformed the house market. The majority of properties transacting in the unit and townhouse market are at the more affordable end of the market. So that could potentially be skewing that data, but it definitely shows the trend that the more affordable properties were in higher demand and therefore prices escalated at a more rapid pace.
Another thing in 2024, which I'll just throw in here, we had some of our team awarded Property Investment Professionals of Australia at the PIPA Awards. So we've had qualified property investment advisors. Melinda picked up 2 awards and Briley and our team picked up 2 awards at the National PIPA Awards as qualified property investment advisors. Another thing to happen in 2024.
It was something to happen. It's not market related, but of course we're very passionate about what we do here at Streamline Property Buyers. We do spend a lot of time educating the community around property investing. Obviously, part of the reason that we conduct or record these weekly episodes on the podcast is to educate people. We don't get paid to do this. This is just part of us giving back to the community to help people understand what they need to know when it comes to transacting here in Brisbane, because we feel that there's a lot of false information out there and we're really wanting to provide factual information for people. And obviously part of the recognition that we received at the Property Investment Professionals of Australia Awards for Excellence was for that contribution back to the community in the information that we share. So we hope that you continue to value this information because it is part of the values that we have as a business in order to give back.
Hopefully we educate and entertain on our podcast a little bit. So another thing we noticed is through the year is supply constraints, buyer frustration. Listing numbers have been low.
They have,
and are still historically low at the moment. It's what we're seeing at the moment. We've not experienced really a lot before, long-term wise, that is. But we're definitely low on numbers and properties are selling very, very quick. Probably a trend that has stayed around for a long time now, with the frustrated buyers being out there, is multi-offers.
Yeah.
We're still seeing multi-offers happen a lot. Auctions have probably increased a little bit more in popularity. I think Brisbane will probably continue that sort of trend. But the multi-offers and low listings have been very common in 2024.
And this is one of the things that sets a lot of capital city markets apart, and that is the number of properties that are available for sale. When we look at total listing volumes, Brisbane is still well down on its long-term average, and that is one of the reasons why we have this imbalance between supply and demand. Supply is low, demand has been high, and that's what has continuously put that pressure on prices here in Brisbane. We can look at how CoreLogic has measured the demand in the market. One of the indicators we can use is days on market. Days on market has crept slightly up over the year, so it was a much more competitive market at the beginning of the year compared to the end of the year, but we've only seen very slight changes in days on market. So although it's still days on market, I believe at the moment is 22 days as opposed to 19 days 12 months ago. So there's only minor shifts. I will say, though, at a suburb level, we are seeing those days on market indicators move much faster in some locations, and it's taking a lot longer to sell in other locations. So Brisbane, of course, is not one single property market, and it is important for buyers to understand that there will be local variations compared to the median value overall that we're stating right now.
And through the year, not only have we had low listing numbers, but our rental market extremely tight. We've seen a lot of growth there. It's probably moderated later part of the year, but we've seen the rental market remain very, very tight, and vacancy rates consistently below 1%.
Yeah, below or at 1%. I think for a couple of months we saw vacancy rates escalate to 1.1%, still well below historical long-term averages, so sitting at or around record lows here in Brisbane. Now, of course, when we've got a low volume of properties available to rent and we have high demand, it generally puts that upward pressure on rents. I will say, though, at the beginning of the year, rental price growth was a lot stronger than it has been towards the back end of the year. And a lot of that has been attributed to affordability constraints. So if I look back to the end of January, we were seeing annual rent price increases in the housing market of 6.8% growth annually. And in the unit market, rents had increased 12.6% annually. So that's huge rates of growth in terms of rent that the tenants were having to fork out in order to secure rental properties. Whereas fast forward to the end of November, and we saw rental price growth in both segments of the market, the house market and the unit market. Annual rates of growth were sitting at 3.6%. So definitely some relief there for tenants in that we're no longer seeing those rapid escalation in rents. And a lot of that is because a lot of areas are reaching affordability caps. Of course, we've had some new tenancy legislation come in as well, which may have had some impact in causing those rent prices to slow down in terms of the rate of growth. One of those new laws that have come into place is that you can no longer bid, you can no longer actually pay more than what is legally advertised as an amount to rent a property, whereas previously with high demand, people who had more money would actually offer more, and quite often that would result in securing the tenancy. That's no longer able to happen here in Queensland because of changes to rental laws. And of course, you know, these things all have a part to play in shaping property markets.
Yeah, minimum housing standards, I should say. We saw some changes in legislation. I did touch on earlier the election, and that had a little bit of with the stamp duties, which we touched on as well. And that had a bit of sentiment in the market. Things tend to quiet down around elections, and then obviously when things settle down. Following that, well, that was in October, we saw another one off the track here. The Brisbane Lions win the AFL flag. That's always good news for Brisbane people.
And how many years since they won the last flag?
I think it's 20-something years, 20. I should get caught out here. But I know they won
23, didn't
23 years.
22?
22 years.
Something like that.
There you go. So been a while, but the Brizzy Lions win the flag. Population growth. That's been a huge driver in the demand for Southeast Queensland and especially Brisbane.
Yes, throughout 2024, we actually hit record rates of migration into Queensland as a whole. We note not everybody that moves to Queensland moves to Brisbane, but a large majority of people relocating from interstate or overseas do relocate to the southeast corner. That would be from the Sunshine Coast right through Brisbane down to the Gold Coast. So a lot of that population growth has been condensed into the southeast corner of Queensland. And of course, that drives the demand side indicators. A lot of the overseas migration that we have experienced, they often put pressure on the rental market more so than the for sale market. And of course, they would have had a part to play in contributing to that escalation in the rents that were being achieved on rental properties throughout Brisbane. A lot of those overseas migrants as well, typically more used to living in higher density dwelling type arrangements. So again, that does put more pressure or more demand into those higher density dwellings. That's the unit and townhouse segment of the market. So you can see how all of these things had a part to play in shifting the demand to the unit market, whether that be for the rental properties in investment space or the owner-occupied dominated markets as well. We saw that shift across the board.
Another thing we've seen a lot is the challenge for developers for that new supply. I know we talked about it, and you mentioned earlier about the affordability of the unit side of it, and developers, it's just not affordable for them. So the approvals are very low, rising construction costs, council restrictions. It's really making it tough for developers. And I know we mentioned a couple of months ago where we went to a breakfast, one of the big local builders in Brisbane here, and they were talking about a 2-bedroom unit costing them around $1.2 million just to get it out of the ground per unit. So you can see how that makes it very, very difficult for and the challenges for developers to actually turn these products they own.
Absolutely. And, it's not uncommon at the moment to see a lot of projects that may have approval for development. They're in that stall phase. It's difficult to get the off-the-plan sales to enable the funding to build these products. It's hard to lock in the builders and firm up construction prices because construction costs have escalated so rapidly. So feasibilities are being stretched. And, of course, it therefore makes it difficult to bring these products to the market without all of those things falling into place. And this is also contributing to a slowdown in building approvals and a slowdown in building completions. And this is our long-term supply pipeline as well for Brisbane. So we often talk about, well, what is likely to happen in the future? It is based on both short-term and long-term supply, as well as short-term and long-term demand. And we're looking forward, understanding the fundamentals. We can only see prices continue to escalate simply because we're not building enough properties for the demand that's coming into Southeast Queensland. And therefore, we either need to see a huge shift in the number of dwellings that are being approved and completed, or we need to see that demand fall away for prices to stabilise. And I don't think either of those things is likely to happen anytime soon. So it's quite interesting.
Something else in November, at the REIQ Awards in Queensland, Melinda was awarded Buyer's Agent of the Year for the 3rd year in a row. And Streamline Property Buyers, we were very proud to be awarded the Buyer's Agency Year for the 2nd year in a row. So congratulations to not only our team, but Melinda on those awards. A lot of hard work put in by the team. As Melinda mentioned earlier, we're very, very proud of our team and what they do for our clients. It's something we're very proud to be able to do that for people and help people out buying a home or an investment property and helping them through that journey as well.
Now, if I may, I'm going to go back to what we reported might happen for 2024. We don't often make predictions about what's likely to happen in the Brisbane property market, but I put pen to paper, and in every blog that I write, I will make an assumption of the direction of the market in terms of what we're expecting in the future. And for anyone that wants to go back and check on the accuracy of our predictions, in the blog that we wrote in January and also in the podcast episode that we recorded for January 2024, you will have heard or you will have read or you can still read that we stated, regardless of what might happen in the future, that the fundamentals right now in Brisbane were all showing signs of continued price escalation. We didn't expect the 2024 prices to rise as aggressively as they did in 2023, but we did predict price growth, positive price growth in both the housing market and the unit market in the months ahead. So if you were brave enough to rely on our predictions at the beginning of this year, you will have locked in some very decent equity for yourself if you purchased here in the Brisbane property market. And just to get you all excited about what we might be talking about in our next episode, we are going to be talking about the property market throughout 2025 here in Brisbane, and we will give you our understanding of what we expect is likely to happen based on the fundamentals on the ground and what is happening in the broader economy throughout Southeast Queensland. So we look forward to delivering that information to you in the new year as our first episode for 2025.
So the crystal ball will come out of the cupboard and we'll do it again this year for next year. So look, that's been an update for 2024. Hopefully that's been enjoyable to listen to and a bit of an update on what's happened here in Brisbane. It's been fantastic. Looking forward to the next episode where we can help you understand what we think might happen and what the future lies ahead for Brisbane. I think it's just positive. It has been. I think it still stays positive in my eyes. Long-term wise, Olympic Games, all those sort of things. We love it up here. So why wouldn't you want to live in Brisbane? Look, from myself, thanks very much. Hope everyone has a really happy, safe the rest of their holidays throughout this Christmas break, Boxing Day, New Year, etc. But yeah, we'll keep in contact. We'll keep sharing information. Stay safe. Enjoy your time with your family. From myself, take care and bye for now.
And I would like to take this moment to thank all of our loyal listeners for taking the time out each week to tune in to the Brisbane Property Podcast. We do enjoy creating this content, and we're very glad to hear that so many of you enjoy consuming our content every single week. So we thank you for your loyalty. We look forward to bringing you some more exciting and research-filled episodes throughout 2025. But as Scott said, we do hope you enjoy the rest of your festive season with friends and family. We hope you get some amazing downtime, and we look forward to speaking with you again next year. Until then, bye for now.